Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and joining me as he does each and every week would be, it's kind of an old term that we used to use in the radio days when we, for play-by-play. You have the main host, and then they always introduce their color commentator as a partner in crime. I'm not going to go so far as to say Charles Sizemore is my partner in crime, but he's pretty darn close. So, with what we riff about when we're not recording, I think it could be construed that crime is, close. Nonetheless, I am joined by Green Zone Fortune's co-editor Charles Sizemore, and this is our weekly edition of Investing with Charles. And Charles, first off, thank you for joining. Appreciate it. I got something a little challenging today that I want to kind of run by you. And I want to get your take on it. I've got mine, and I'll reserve that because I want to hear what you have to say. But I was looking at the world of finance and even more specifically of fintech. And, we talked about this kind of before we started, and that is, the role of the traditional bank. And by traditional bank, I mean, your Citibank, your Bank of America, your Wells Fargo, your very big, well-known established Chase, these very big, well-known established banks. At one point, 20, 30 years ago, were kind of trend setting in terms of how financial transactions were done. And now it seems like that's just not the case. In fact, these larger banks, these banks that are, billions and billions of dollars in market capitalization rather, are actually following much, much smaller, more fintech companies in terms of how financial transactions are done and things like that. And I want to point out two companies in particular and kind of get a one versus the other take from you. One of them started out as a spinoff of eBay, and was basically their only claim to fame was that they were one of the primary payment providers for eBay. Of course, I'm talking about PayPal, and this is PayPal Holdings, which is PYPL, I believe, as it trades on the market. The other started out as a company that basically just provided very small businesses, mom and pop operations, the small mall retailers, things like that, with a platform to where they could accept credit card payments for goods and services without incurring massive amounts of fees to install card readers and lines. And they even made it adaptable to mobile phones, so you didn't have to pay for an additional phone line into your business, things like that. And this is the company I'm talking about here, is Square, which trades as SQ, I believe, on the New York Stock Exchange. And both companies do serve different purposes, but both of them have converged and seen, I guess, maybe a hole not being filled by traditional big banks, and are taking advantage of that in terms of now branching their services into much, much more than just what their core started out to be. So I want to kind of get your take, and let's talk about PayPal versus Square.
Yeah, sure. Well, I think really we need to cast the net wider, and you need to get more kind of almost philosophical here. Look at our banking system today. Nobody would have ever designed this. This is something that evolved over, 500 to 1,000 years. It started out, the local goldsmith would guard your gold for you. And then he figured out that he could lend out the proceeds, or not the proceeds. He could lend out, he could lend, to borrowers. And then he figured out, I can do this fractional reserve. I could, for every ounce of gold, I can, lend out 10 ounces and then just hope nobody calls it in all at the same time. And that was the birth of banking and all the problems that go with it. I mean, every 10 to 20 years, we have a major banking crisis because of this system, this fractional reserve system that is kind of a mess. It's one of the reasons that Bitcoin was invented a little over a decade ago. There are a lot of flaws with the traditional banking system. It's expensive, it's risky, it involves a ton of regulation to make sure it doesn't fall apart. And even then, it still falls apart every 10 to 20 years. So, nobody would have created this Frankenstein's monster. It just sort of evolved over the centuries, and it's what we have now. So fintech gives us a way to really just rethink the whole thing. And both of these companies have been wildly innovative. PayPal, it's hard to think of this as an established company because, I remember when PayPal came out in the 90s, it was like, wait, what? I don't have to write a check and put a stamp on the envelope and send it. I can just send people money via email, but is that safe? How does that work? that seemed so edgy and different back then, and now it's standard. I mean, this everything else has been an evolution of that. And as you pointed out, Square has really done wonders for small businesses. If you're that, the babysitter, for crying out loud, can take credit cards now with the Square app. I mean, like that's how easy it is. Before, it was very expensive to take credit cards and debit cards. It involved a lot of investment. It involved a lot of clunky, those big points of sale terminals. They're clunky. They're not elegant at all. It's, Square made everything very simple. Now, beyond that, you look into what their kind of, second generation products are. PayPal's Venmo has really become kind of the standard. You go to a dinner with your friends and, the bill comes. It can be a lot easier for one person to just pay the bill and then everybody Venmos them the cash. Or, I think I pay my yard guy with Venmo. I pay my kid's soccer coach with Venmo. It's a very easy way to move money around.
You pay your kid's soccer coach?
I do. That really is a first world problem, isn't it?
That's a huge issue for you. Anyway, that just struck me as being odd. I was a soccer coach in college and no one paid me anything. So I'm just,
the times have changed, buddy.
Maybe it was my value at the time, but the team I coached went undefeated and won the championship. So anyway, back to it.
Like calling scoreboard. Anyway, my kid's soccer coach is from the UK and has a fancy accent, and that's worth paying for. It doesn't
matter. Anyway, back to PayPal and Square.
Well, so Square has a competing product. A lot of people have used, I'm sure, Cash App, which is very similar to Venmo. Really, one's as good as the other. It kind of boils down to what your friends use, right? So, kind of coming back to it, going back to that whole concept of nobody would have ever invented the banking system in its current form. This is just what you get through incremental evolution. What you look at when you see these apps, this actually is more what a proper financial system would look like if you were inventing one from scratch. And for a lot of the world, that's what's happening. A good analogy here is phones. For a lot of the developing world, it was too expensive for the government or for the local phone monopoly to install phone wire, and electricity and everything else in remote villages. They just didn't do it. It never happened. Those people were unserved. Well, what happened with mobile technology is when that got cheap enough, every villager in the Amazon of South America or the wilds of Africa, they all have mobile phones now. They're now connected. Well, similar dynamic with banking. These most poor, lower income people around the world, even in the United States, for crying out loud, if you have really bad credit, it can be hard to get a bank account. It really can. These services enable people that are currently unbanked to have basic financial services. If you are willing to be a little bit creative and use these services to their full extent, you can replace your checking account. Now, I'm not going to do that. You're not going to do that. The checking accounts we have work for us. But for kind of that struggling. I don't know. I don't want to insult these people, but for people that have credit issues and
for all intents and purposes, you can receive the same basic services with Square or Cash App or Venmo and PayPal that you can with a Wells Fargo or Bank of America.
And generally a fraction of the cost without the credit issues. And,
right.
And it's a big deal, particularly for struggling consumers that are just kind of really, having a hard time getting onto the ladder, right? And this is a very nice stepping stone for them. The companies we're discussing today are very domestic in focus. PayPal does have some international exposure, so does Square, but that's still sort of in the infancy. These are still primarily American companies. The big growth potential here is just unrolling similar services around the world. That is the future of finance.
And it's interesting. I was just kind of doing some basic research and I was looking at stocks and things like that in terms of Square and PayPal. And I'm just looking at Square right now. Square is both these stocks in terms of just, if you're just looking at just the stocks, are volatile. They do not move in a straight line up or down, and it's very mixed. I mean, I look here in January, Into February, Square had a nice run up and then a pair back, met a double bottom in March into April, then back up again and then back down. They met resistance at around the $200 per share mark, went back up to find, that was their support line, found some resistance at around 279, 278. And now Square is ticking back up again as it surpassed the 270 mark. If I look at PayPal, I'm venturing a guess I'm going to see about the same. And I do. I see, a top in kind of February, March, followed by a drop in March, and then another kind of a small double top at the end of the month, and now it's up and then back down, and now it's inching back up to it's a little bit farther off of its resistance line at 300. It's at 287 right now. So these companies are moving very closely in tandem, which could be explained by one of two ways. One is that these are companies that are very much the same.
Yeah, I mean, these they're both fishing in the same pond. Yeah, right. Like their products are different, although Cash App and Venmo are very similar, but their overall market is slightly different. But it's still fintech. Like if you're bullish on one, you would likely be bullish on both. Now, sort of the kind of breaking it down. We look at Adam O'Dell's Green Zone rating system, and it takes 6 factors. It measures stocks by these 6 factors. Both of these are very similar in that they rate poorly on size because they're large. Larger companies tend to, all else equal, smaller companies tend to perform larger companies over time. Not always, of course, not in every market, but that is a generality there. Both stocks are also expensive. They rate low on our value factor. Again, part of that is these are fast growth companies. And so because they're fast growth, people are bidding up the prices. But, all the same, they are expensive. And then lastly, as you pointed out, they're volatile. These stocks move around a lot. Now, what are the pluses here? These are both extremely high growth companies. They've been growing like weeds for years, and there's really no end in sight to that. Like their growth prospects look fantastic. Momentum, they have decent momentum. Now, when we talk about growth, we're talking about the underlying business. When we talk about momentum, we're talking about the stock itself. The stocks have had a decent bit of momentum here. They've had a lot of good wind in their sails here. And then finally, quality. And I know that sounds kind of nebulous, but we measure quality a couple different ways, but it's quantitative here. And it really comes down mostly to profitability and to balance sheet strength. Well, the fintech companies are tech. They're more tech than fin, right? Like, but fin for finance, they're more tech, and
they're tech companies in the financial space, basically.
Exactly. And so they tend to have very healthy balance sheets because they tend to be capital light. Yes, they have to have yes, they have to have infrastructure to run all this. Of course they do. But they don't generally involve, managing a huge network of banking branches and everything else. These are capital light businesses, very capital light, and they're also highly profitable. So they tend to have very high returns on equity assets, et cetera. So that's part of the reason why these stocks tend to be expensive. They're high margin, high quality businesses that are growing like weeds. So both of them are very similar in that respect. I like them both. I think both are very decent long-term holdings. If you're going to put a gun to my head and make me choose one, I would go with PayPal.
And why? Tell me why. And I have a reason for asking that.
Sure, you bet. PayPal's current international exposure is a little bit better. I feel like they're in a better position to further exploit that. And then secondly, Venmo does have a larger market share than Cash App. And the way things go in this space, market share is everything. People use networks because people use networks. There's a reason why every retailer in the world accepts Visa, because everybody accepts Visa. They accept it because they accept it, and I carry it because they accept it. They accept it because I carry it. I mean, it's a virtuous cycle. So I think that's working in PayPal's favor.
And I'm going to go the other way. I'm going to lean a little bit more toward. I like them both as well. I think both are strong. I think both are good long-term potential investments for a portfolio. I think both are innovative. I think both are going to continue to grow. I like Square's growth rates much better than I like PayPal's. 3-year EPS growth rate for Square is about 67%, whereas it's only 34%, or roughly half that for PayPal. In terms of sales, 3-year annual growth rate in sales for Square is about 63%. The growth rate for PayPal is only 17% over the same 3-year period. So I like the growth. I agree that PayPal and Venmo are a little bit more widely accepted, but I don't think that's a barrier. I think it's just because Square has decided to build a stronger foundation in terms of domestic before they decide to branch out and look globally. I think Square has a little bit more growth potential globally because of that. Venmo may have reached a bit of a ceiling there. So I think all things considered, again, both of these stocks are great stocks to own, I think. But I like Square and its potential for growth. And both are, in terms of valuation, both are very overvalued, especially compared to their industry peers. PayPal is trading at a PE ratio of 68. The industry average is 20. And Square isn't much better. In fact, Square is actually worse.
You say overvalued. I would say expensive. I would not say it could, because expensive and overvalued could be two different things. I would say they're very expensive, but
yeah, they are. They are.
But does the company's quality and prospects justify that price?
And I think in both instances, I think they do. I think
that's where I'm going with that. That's why I would say not so much overvalued as, yes, it's expensive, but that doesn't necessarily mean overvalued.
And I think Square is setting up nicely for potential breakout once it hits that 280 mark, which it's about $10 away from that right now. That's kind of a resistance point. I think there's potential to break through that. I just like how everything sets up for Square. Not that I don't like PayPal. I just think Square has a lot more growth potential. So I would say I would lean into Square a little bit more than I would PayPal. But that's me.
Yeah. No, I think we agree, though. They're both looking pretty good.
They both have a lot of very strong potential. So, Charles, thanks again for doing this, and we do this every week. So make sure you lock in on YouTube. If you're not subscribed, make sure you do hit that subscribe button and the notification bell. Mash that, and you get notified every time we put out a new video. We've got a lot more on the way. We do every week. We've got Ask Adam Anything, where I sit down with Adam Odell, our chief investment strategist, and ask him any question that you like. We have the marijuana market update, as well as the Bull and the Bear podcast, where we cover wide ranges of the market, from cannabis to crypto and everything in between. So I do encourage you to do that. Also, we do have a membership program here on YouTube where you can join and get more insight and information into the cannabis market. If you click the join button on our YouTube homepage, you can find out more about what you get there. And don't forget to check out the mothership, as I like to call it, or moneyandmarkets.com. That is where everything originates. We try to provide you safe, sound, smart, simple, profitable investment information each and every day. Myself, Charles, Adam Odell, and many others, the entire team works extremely hard all 7 days of the week to make sure we're providing that content for you and for your portfolio. So make sure you check all that out. For Charles Sizemore, Green Zone Fortunes co-editor, I am Matt Clark, research analyst for Money and Markets, wishing everyone safe trading.